Our final panel, Artificial Intelligence and Robo-Advisor in Financial Services. Please, Carl Tallis, Advisor and Senior Vice President, Partnership, Rainmaking Startup Bootcamp, please.
Thank you, thank you. Exciting topic, always at the end, right? Hello, okay. So I just want to introduce the topic and the panelists. First and foremost, all the panelists, if you want to come up on stage first and foremost, just grab a seat. So artificial intelligence and robo-advisors in financial services is the topic. Everyone's got a mic there? Okay. All right, so before I introduce our panelists, I'd like to first just give you guys some background on this discussion. So, I mean, according to Adobe and Econsultancy, they ran a survey recently of 700 odd executive leaders in this sector, in the FSI sector. And what was interesting is that 44% of AI adoption happens to be in this sector. 44% adoption of AI above other sectors is in the FSI sector. Of those that were surveyed, what was interesting is that majority, 61%, were already considering working on adoption of AI in their portfolios. And I think that's really something that's of interest here in terms of how and why is that the case. What are the trends and themes around AI adoption, robo-advisory being a key part of that, and where is that going to head? And if you want to think about artificial intelligence, first and foremost, improvement of customer service, personalization is a big thing. And then obviously from a chatbot perspective, how does that innovate that area? And then from a robo-advisory perspective and wealth management perspective, what role are they playing, the likes of having not only access to big data, but also how do you manipulate that data, which is personalized and then helps you take the stress out of wealth management. So not to steal the thunder, I think first and foremost, let's introduce our esteemed panelists, 3 technology leaders in the field in this region, and I think they're going to end up being global leaders from that perspective. Junaid Wahedna is our founder and CEO of Wahid Invest. If you could introduce yourself and your organization, that'd be fantastic.
Hello. Hello.
Might need a new mic.
Hello. Yeah, I think this is okay. So, my name's Junaid Wahidna. I have a background in mainly quant and math. So my master's degree is in financial engineering and stochastic mathematics from Columbia. Very into AI. The whole department's actually known for it. We set up a robo-advisory entity called Wahid Invest, which is automated investing for the retail masses, but it's also Sharia compliant. So it's for practicing Muslims who want to stay away from riba and anything unethical, who don't have millions of dollars, right? So if you don't have millions of dollars, where are you going to go? If you have 10,000, 20,000. So we try to make it very, very accessible, transparent, and efficient using technology. So that's my background. We set up Wahid in America, got SEC regulated, and we're moving east. So now we launched in the UK, FCA authorized, soon to be in Saudi, UAE, India. We're authorized in India now, CIS. Basically, we're trying to go global. Awesome. And that's it for me.
Great. Paweł Stefanski is the FSI leader for IBM in the Middle East and Africa region. If you can
yes.
give us an introduction.
Let me try. I think it works now, yeah? So,
yeah.
Okay, great to have you all in this last panel of the day. Obviously, IBM is closely associated with another brand name related to AI, which is Watson. Watson these days is basically a collection of tools and APIs, application programming interfaces, that we provide to developers, to startups, as well as mature companies to use and embed artificial intelligence into their applications and solutions. So that's the perspective I will be taking. Another one that we are developing right now is a collection of industry-specific platforms for different industries. We launched the open banking platform at Cybos recently, and that again is a part of our approach to the market. We believe that established institutions, JP Morgan, Chases of the world, have a big role to play in that investment advisory, robo-advisory area, just as well as in all other financial areas, and they will be using these platforms and APIs to provide those services. So I'll speak from that perspective later.
Fantastic. And Sama Obeidet, I hope I pronounced that right, is the CEO of Stallion.ai, obviously at the heart of all this. Go for it.
Do you hear me?
Yep, we can hear you.
Yeah, do you hear me, guys? So my name is Samar Bidat. I'm the managing director of Stallion Artificial Intelligence, Stallion AI. We are a group of PhDs, machine learning scientists, data scientists, and with a recent branch in Dubai, we have also an R&D lab in North America. We are offering basically artificial intelligence solutions and products and services across different industries to private and public sector. I'm also the CEO of Investify, which is MENA's first AI-driven investment management company. We have developed during the last couple of years a deep learning technology that manages investment portfolios to basically deliver high risk adjusted returns than traditional asset managers. And we're going to talk more about this basically.
Awesome. Fantastic. And just a little bit of background on who I am. So I currently consult and I'm an advisor for Rainmaking and Startup Bootcamp on the entire fintech partnership area. But I sit on the board of two other companies, Velocity Black out of London, which is a unique experience provider in the loyalty space, who also adopt AI as a core fundamental part of their solution, and Fly 365, which is working closely on that front, which is an online OTA. I previously headed up Visa's Innovation Strategic Partnership area on the digital partnerships, fintech and venture front for the CEMEA region. So I spent a lot of time with most of the big banks here and the regulators, but I think there's going to be a really dynamic discussion. So I guess just to kick it off, let's start with an understanding of what are those big trends and themes that you and your organizations are currently spending a lot of time thinking about in relation to AI for financial services and specifically around AI.
So something I want to start off emphasizing is that AI doesn't really mean anything. There's no such thing as this is AI, this is not AI. Yep. It's just math, right? So if you go into analytics and it's a subset of math where you have an algorithm that is strong enough that it learns itself. So you can really apply it to anything, but it depends what you want to apply it to. Now when we're talking about investing, do you want to apply it to portfolios? I don't think so. Portfolios are way too dynamic and it's very, very hard and risky. So you have the biggest hedge funds in the world like AQR, so on and so forth, who specialize in this. And sure, they can do it with $1 trillion, but most people aren't looking for alpha. They're not trying to beat the market. Most people, when it comes to robo-advisory at least, the whole point is to give access. It's saying, look, you can't go to JP Morgan, you can't go to the rich guys, so look, now you can invest in a diversified portfolio and it's simple. So AI specifically or any advanced math is not really applied to the portfolios. Where it can be applied is simple things. KYC, customer support. So KYC, for example, we have an algorithm that automatically reads ID cards, right? So you put it scans it can translate languages. All of that is a subset of math. It's all machine learning to a certain extent. Then you have chatbots nowadays. That's a form of AI. It knows what you keep asking and it ranks it and it knows how to answer you over time. So I think the main use today is for efficiency. Using math and automated processes for a certain operation. So instead of hiring 1,000 customer support people, you need to hire 10. So it's much better as a business. It's very, very efficient. Same with KYC. Instead of having a huge compliance department, you can have 20% of the compliance staff. So it can be applied in the more soft skill sets, and that's what we're doing, and I think everyone should do. But in the portfolio piece, it's very volatile. So even if you see the companies that do apply AI and advanced math and these quant funds, you can say, they still do have an investment committee of quants, of specialists and PhDs who oversee it. It's not something you can just say, oh, I'll see it in 10 years. I wonder what the machine will do with the market. It's way too risky.
No one does that. So for us at least, considering we aim in the Sharia compliant space, which is very nascent, there isn't much out there anyways. There's a handful of funds. Our job is to make it efficient so that there isn't an extra cost of being an Islamic investor. You know, so you don't have to be rich to get an Islamic portfolio. That's our main aim. So we don't go way too deep into the investment part of AI. In fact, most people don't. The high net worths focus more on that from what I've seen and what I can tell. But for us, it's more of an efficiency piece, right? Where can we add it? Now, keep in mind, our team at Wahid is super quant and math heavy. So our chief technology officer actually was on the PhD track for natural language processing at Columbia University, where I met him, in the computer science department. So that's pretty much as machine learning heavy as you get. You know, you and I have a quant background, but it's just not something we can actively apply here for a retail client base. How are you going to explain that to someone who's invested $100 and say, oh, you have extra 20 bips of profit and then you know, less standard deviation? It's unnecessary. It's probably more cost to explain. So for us, it's more of an efficiency piece, personally, at Wahid.
And it's interesting, you actually touched on an important aspect of all of this as well, which is financial literacy, which maybe at the end we can start to think about a dialogue around. But Pavel, on your side.
So I will take off from where you left, agreeing with most of what you said and maybe drawing some distinctions in a few other places. Certainly, we don't see a whole lot of AI applied to the actual portfolio allocation, specifically talking about robo-advisor, wealth management type of area of applications. I agree with you, it's all about customer service, customer onboarding, personalization of these processes also, right? Artificial intelligence in form of natural language understanding and some psychographic analysis can be very helpful here. One of the APIs we have is allows you to, for example, decide on, or identify a large number of personality traits based on a sample of writing of a person. And you can imagine how of that such a data you can then tee off very customized ways of interacting with that individual, whether it's through an automated chatbot or whether through suggesting to a human advisor of what they should or shouldn't do with that person, right? So the customer service, onboarding, other business processes oriented towards customers are definitely a ripe area for some forms of AI to apply. The other one is this automated chatbot kind of situation, right? 24/7 support. Before coming here, I checked out a few of the robo-advisor sites, and it's kind of funny to see them being switched off because they are outside of hours of operation, right? And the automated chatbot doesn't really work, and you have to wait for a human to wake up. Those kinds of things can be provided relatively cheaply and with relatively high degree of quality already today by, you know, basically standard of the shelf type of AI technologies. And the last one I'll mention here is this, you mentioned the process automation, right? So, you know, augmenting the widely used now robotic process automation techniques with cognitive elements, right? So again, making sure that all the documents are correctly recognized, increasing that accuracy beyond what humans even can do, right? That's a ripe area for AI to apply to automating the processes that may not be maybe fully defined, but have some variability into them, but still, you know, can be automated by using AI. So those are the kinds of things where we see them.
And I guess on that front, it's the repetition of that process. You know, how do you reduce that from an algorithmic point of view, and obviously from a, you know, from an intelligence point of view, that you know, leveraging that data and transforming it, which leads us nicely to Sama on your front. How do you guys see it and where things are moving?
Well, I would partially disagree with some point and agree with other points. Definitely AI is like embedded in most of the processes in customer service and so on. AI basically is huge, disruptive, transformative, is adding a couple of $100 billion to the region here by 2030 and almost $15.7 trillion to the global economy. Basically, robo-advisory is more passive buy and hold strategy. So you are using modern portfolio theory here, or mean variance optimization. And I don't see AI when it comes to generating excess returns here, because all you need just to buy and hold, and you want to be basically counting on your the estimations of expected returns. And I don't want to get too much technical in the discussion. I just want to keep it a little bit brief here. But AI basically is really not only disrupting the client side, but it's also disrupting the asset allocation side. It's disrupting the alpha generation side also. So we can see live examples. If you know Renaissance, basically the most successful hedge fund in the world, they are generating almost 40% a year since 1988. And they are running by deep learning technology. So we have real life applications here for how AI is really disrupting asset management and asset allocation. So we can see AI basically at the asset allocation side by doing some market timing, doing some risk profiling, also many other functions that can help to generate more excess returns relative to benchmarks, let's say. Yeah, and I would.
Excellent. So I guess from that angle and looking at those 3 touch points, what would be that current state of AI adoption in this region, but also it doesn't have to necessarily be this region, from a real use case perspective? I know you're at the heart and soul of that, but what is that today?
It's non-existent. So what we've seen is you have, I'd say 9 out of 10 companies who are AI driven don't actually use any AI, right? It's just they're probably plugged into some chatbot.
Yeah.
It's quite sad to see. There are, of course, 1 in 10 like your company who are really, proper quant heavy and know what they're doing, but rare over here. Like even their R&D, part of it's in Canada. You don't get that talent here, right? Where do you find university graduates who have PhD programs in theoretical math? From the machine learning side, they don't even have stochastic math programs. Like it doesn't go in that side of skill set. So I don't see it here, to be honest with you. Even in most of the world, I don't see it at all. It's slow, it's emerging, and it's starting right at the top, right? So you have the multi-billion-dollar companies who can afford to hire these PhDs and quants, and the big hedge funds and the banks coming in first. In retail, I hardly seeing it being adopted. I don't think it's going to be anytime soon, to be honest with you. And in this region, it's not here. Everyone says AI, but so far, seriously, out of 100 companies I've seen, not a single one would qualify as genuine, machine learning. It just does not exist.
Agree. Pavel?
Okay, so my perspective is a bit broader than yours, right? I'm not looking at AI only as an equivalent of machine learning. And I agree with you on that aspect. When it comes to these maybe more mundane ways of using natural language processing, for example, right, or text-to-speech, there are certainly examples of this being tried. I don't think that there are many successful examples in the sense of, we talk about augmented intelligence, not artificial intelligence, right? The reason we do this is we want to draw the distinction between kind of autonomous general purpose AI, which does all by itself, and the AI methods, techniques, algorithms which coexist with human advisor, human in certain role, right? To us, the latter is the right model, at least for the near future. And in those kinds of scenarios, we don't see really many good applications of AI. They're trying, a classic example is your run-of-the-mill chatbot on any web banking website. You go there, you ask it a generic question like, what types of products can you sell me? And the answer will be some bogus, menu item or completely, non-trained kind of response, which shows you that this edge of intelligence is very sharp, narrow, and not yet, what we would expect. So I think that in general, I agree with you. I say, in the next 5 to 10 years, there's certainly a lot of potential for using AI and embedding it in various scenarios, but we are not there yet, especially here.
Well, I can see the adaptation process of AI in predictive systems and absorptive capacity and successful implementation is not instantaneous. I fully agree with you. It's not perfect also. There are as we discussed before the panel discussion, we have lack of knowledge, lack of talent, we have lack of expertise, and we need to bridge those gaps basically somehow. So, but there are some solutions here. We can see that easy to use AI solutions are one of the things that basically you need a PhD to design AI, but you don't need a PhD and deep expertise to use AI solutions. We need to basically take into consideration also that AI should fit market and culture. So AI in California is different than AI in Saudi Arabia, so, right? But there are some successful massive enterprise solutions that use AI and machine learning technologies and many other AI capabilities basically. We were able to basically build AI into internal audits, into compliance AML, into investment management, into, I would not call them chatbots, I would call them virtual assistants. We do not develop basic chatbots. We work on multilingual, highly customized chatbot that use different languages, including Arabic language, that can handle 90% of client inquiries and basically replace the first line of customer support so that you can basically allocate those resources to a more innovative tasks, let's say. Yeah.
That's brilliant. That's brilliant. I know we're getting pressed for time. We've got probably one more question, and I'm going to try and keep it as short as you can. But you know, a lot of analysts are saying that it's expected the big winners will be the clients, and the losers will be, you know, those financial firms and advisors who do not embrace the changes that are brought about by a robo-advisory solution. Can you share one example in relation to your organisation, how you guys are working with a client or partner to realise the benefits of AI from a wealth management perspective?
I'd pick KYC, right? Onboarding a client, they have to submit their documents. I think at this point, 70 or 80% is completely automated. It reads everything, checks it, and we just have to oversee it, so you need one guy to do that. But in other companies, you need someone going through every single document. Okay, is the face the same? Is this a real national ID? You know, so on and so forth. 80% of cost savings is a huge amount, and that just gets better, right? As you learn, as you have more data, as you grow. So I think for us personally, that's a huge expense. It's a lot of manpower, every single passport copy, every single address proof. So something as simple as that makes a world of a difference in scalability. You don't want to have a 1,000-person employee base. You want to be like Robinhood in the US, who has 200 people and have 4 million clients. Imagine that. Over here, if you had a bank with 4 million clients, you have 20,000 employees plus. So in today's day and age, you need automation to be scalable and efficient. And with efficiency, it's going to be very hard for people to compete if they have such high, fixed costs. So I would pick that.
Excellent.
So I have two kind of startup innovative companies that I want to mention here by name, right? That both happen to use Watson APIs. One is the Logic Value, a very kind of interesting, it's not robo-advisor purely, it's more of a company that helps investment advisors analyze performance of different financial instruments ranging from ETFs, pension funds to equities, and it is augmented with a cognitive interface called Julia that is able to handle over 900,000 questions with 85–90% accuracy. And another one is called Open Topic. They are basically providing a dynamically configurable service to banks to analyze unstructured data streams en masse at scale and in a very, again, user interface, natural language interface way, configuring these capabilities on the fly. So very, very interesting kind of service. Again, not something that you can do without AI.
Exciting solutions there.
Well, the investment management problem is multidimensional in its nature. There's a dynamic nature here in the market. So you have many factors. An investment advisor would not be able basically to handle all these factors in order to basically react to what's happening in the global markets. So having a deep learning technology that can handle basically this problem is a big competitive advantage basically to any company that have this or hold this capability. So usually the investment advisor, they are biased, emotional when they are taking decisions. So this is another problem. When you take this away, you are basically increasing efficiency, reducing uncertainty, and prediction is always getting cheaper and cheaper using AI and so on. So this is the main point here. So this is how we are handling the investment management problem.
That's brilliant. And I think, I mean, we can all relate to this personally because we all have personal investments. We're all thinking about what that would be. I think that last point around, you know, that stress factor is a big one. You know, de-stressing, the whole art of wealth management and investment. The art of, you know, onboarding is a huge problem. Just the paperwork you got to go through and the steps and the human touch points around that is significant. And there are real solutions there. There are real platforms that are there that are providing those early stage efficiencies that can be leveraged by, be it fintechs, be it consumers directly, and be it corporates in their digital transformation. So I'd like to thank our panel. I wanted to open for questions, but I think we're going to leave that because of the fact that they're going to turn over this conference room. Junaid, Pavel, Sama, thank you very much for this panel discussion. Hope you guys took some learnings out of there.
Thank you.
Thanks.
Thank you so much, everyone, and inshallah we'll see you tomorrow. Thank you.